of warning, this is my first, not only first webinar, but my first ever time I have used um, PowerPoint. Sounds kind of shocking, but it is. I've gotten through my whole life without it, but I think I've got the hang of it. Hopefully, I've got the hang of this webinar, and I'm here to bring you glitches for riches. Like I said, again, the production might not be first class, but that's because on the good side of things, it's because I'm a trader. I'm not a professional influencer. I'm not you. My skills are basically limited to trading, which is a good thing for you, the listeners, but maybe not good for me and the other aspects of the world. So, words of warning, but I think I've got everything under control. If not, send me a message. And so we're going to do this. I'll discuss, give a presentation on these glitches. I'll discuss what exactly is a glitch, what is, the basis of glitch strategies. I'll give some examples of glitches, and then I'll finish off with a couple of bonus examples, and then at the end of it, I want to do a Q&A. So if you guys have any questions, please put them in the Q&A. As I just said, my skills at this type of stuff aren't amazing, so it's gonna be tough for me to do too much multitasking. So I'll try and get to those questions at the end, and we'll answer as many questions as possible. And if there's still other questions, then we're just gonna I'll have to DM you or do it some other way. But I want to get to all the questions. I mean, this is the goal of this to have this more of a discussion than anything. So. Let's hope everything is working well, and let's get to this presentation. I hope you guys are ready for it. Okay. All right, here we go. Glitches for riches. How to profit off inefficiencies, malfunctions, and arbitrage within the markets. So what to expect from this? Let's start with what not to expect. As I've already said, I'm not, this is not my spill. I'm not an influencer. I'm not here to promise you, well, again, the title is Glitches for Riches. So I guess maybe I am here to promise you riches. But before that, I want to make sure that was just kind of a playful title. But I do think, of course, I do think these strategies have a lot of edge. But even if you execute these strategies well, trading is a really tough profession or pastime or hobby, however you're approaching it. And before I do any of this, I talk to traders, I do interviews. I think the best message I can send is just warn how difficult it is. And if you're not prepared, if you don't have the right capital, the right time, the right education, the right strategies, then probably the best thing you can do is step away. I can't help you with those first two things, but today I'll try and help you, with some education and hopefully open your eyes or, reinforce what you know about the whole world of glitch trading. So again, I'm not promising I'm not going to hand you this golden strategy. You're not going to, next week you're not going to make $1 million, not because of probably what I told you. But my goal is just to open your eyes to what I hope is a different mindset, a different way of looking at trading. But yeah, I'm not I'm not this guy. So that's what not to expect from this. Um, of course, what to expect. I want to be as truthful as possible, whether it's about these strategies or trading in general. Um, that's what I think this whole business or trading education or trade in general lacks is honesty. Everyone's trying to sell something. Everyone's trying to tell you how easy it is, how rich they are. I'm here to tell you it's not that easy. And honesty goes in, well, most of what you're told about what strategies have the most edge is not the truth. So I'm here to teach you a different perspective on trading. What you've probably what's out there, I don't know what you've been taught, but what's out there, what I'm only seeing is, the same old tired stuff, which is technical analysis, and it's stuff that's based on candlestick patterns, and I'm not saying you can't make money trading that way. And especially now, the market raging up, a lot of people are doing that. But from my experience and from what I've seen and what I've seen other traders do, I think there's far greater edge in these type of strategies that I call glitch trading. And this is not a message. This is not a secret. I didn't invent these strategies. I'm not the only one using it. And I'm not the first one to talk about it. And there's, as we said, of course, there's lots of traders using it, but the message isn't out there. So I want to try and share that message and spread the message and spread the word about this glitch trading. And although I will talk strategies, and at the end, actually will talk about a legitimate glitch trade that you could use now. And I feel like that I've started to use, and I think there's edge there. But that's not my goal, is to hand you a trade that will make you a bunch of money. I want to hand you uh, a way of looking at the markets, a mindset. I want you to handle, strategies. And that's the best education you can get. When, the problem is a lot of people, they're looking for this magical trade. Oh, buy Tesla, sell Tesla, or do whatever. No, the best way, the best help that someone can be is kind of teach you a mindset and teach you a strategy, way to look at the market. And when I'm looking for, and of course I'm still learning. So I'm out there. I'm not looking for someone to hand me a trade. I want someone to show me something new, a way to look at the market. So this will be more of a guide, a roadmap. And support. I hope to offer support. This is not just a one-off, webinar and then, see you later. No, I want this to be a continual process. Before this, I've written about glitches. I've done interviews, I've talked about glitches. I want this to be a continual process. I want, if people have questions, they can reach out to me in this webinar, after the webinar. This is a continuous process, and we can work as a team. We share ideas, and that's a great thing about glitches. And we'll come to stories later. There's been rookie traders, guys brand new, who come out with these amazing strategies. Just, so it's possible for any type of trader to come up with this. So we work, the support and working as a team is the best way to approach this. About me, we'll quickly do this again. So why, good reason why you should listen to me. I've been a professional trader for 23 years. Trading mainly equities, crypto, and options. Uh, Equities is my bread and butter. I've been, a lot of people, I would say it was an equity trader, but I've been through this with a lot of people, a good trader or a real, great trader. And I'm not necessarily saying I'm not trader, but it should be is a trader, not an equity trader, not a crypto trader, not an options trader. You go to where the edge is. And although I've, spent most of my career in equities, I also trade crypto. I've done some options. And options, I'm by no means a professional. I'm still learning that craft, but I do dabble in options. Crypto, I spent a lot of time in the past and more time now. I think this is a good place. Every trader should look for glitches or, volatility. There's all kinds of action there. So I'm spending more time in crypto. Um, I've worked at my background is prop trading. And when I say prop trading, I'm talking about what I say legitimate old, maybe not old school, but real prop trading. And this means proper firms where you have teaching, you have education, they offer capital, they have a proper office, and most importantly, you have profitable traders around you. I know the new trend is these trading challenges of prop firms. For me, that's, it's a sad thing, and it's really, I think, poisonous to the industry. And for me, these aren't even prop firms. I know they use the name, so that's one thing I can warn while we're here. Be careful with that. I know a lot of traders need leverage, they need capital, but that's one thing that really scares me. Not only have I worked in these, I've also at these prop firms, I've also owned and ran my own prop firm. And I did that here in Poland for a few years. It was a pretty crazy story. I go through that in my book, but that gives me even further knowledge in the workings of the prop world and what guys are doing and what strategies they're using. So I have that experience also. And a lot of my experience just comes from reading, watching, listening, consuming anything trading related. I being in this industry, like I'm passionate about trading. I love trading, even though there's been plenty of downtimes, there's plenty of bumps and bruises, but I still have this love affair of trading. And I think every trader should feel that same way. If you don't love this profession, then you're going to have a really tough time. Even if you love this profession, the odds are you're not going to succeed. If you don't love it, you won't. This is, trading is not a get rich quick type place. It's despite what you hear, it's a really tough profession and you have to really love it. And to get a great education, not only do you have to, have a mentor, you have to train the right environment, but you also have to have a head on the swivel, always looking for new information, what guys are doing, what girls are doing to make money, what these, futures traders are doing. And I love that. So again, that's a great way to get information in general. And that's part of what's educated me and what, has reinforced my belief in these glitch trades. And another great way, another way I've gained knowledge over the years just by networking, talking to traders, whether it's online chat rooms, uh, it's through meetups, it's through conferences. That's where I've got a lot of good strategies, a lot of good insight. I go up to people, talk to them, and I love it. Not only to get information about trading, but as a trader, it's good to talk to other traders. They're really the only ones who understand how we think, how we feel. So that's, another aspect of my education, which think should be a part of everyone's education. Um, and I love to, why am I doing this? I guess I love to coach. I love to educate. I spent most of my career sitting there in front of a computer, slaving away, 20, almost 25 years of, doing that. I have coached quite a few traders in the past. I have success, but now I want to get out there. I want to network. I like to talk to traders. I think I have an important message to spread that's not being said. So that's, the reason I'm out here. And these are, I guess, the background why I feel like I have the resume or CV to spread this message. Okay, so let's get into the trading part. Although I've already gone on and warning about disclaimers about how tough trading is. In fact, it's, really boils down to two things. It boils down to having a strategy with an edge and then executing that strategy efficiently. Um, it sounds pretty simple, especially since 95% of traders fail. Well, you just need two things. All the other stuff, it's bullshit, let's say. Again, and I'm saying that because you can say that kind of goes into the bullshit goes into the executing the strategy efficiently. But if you really, really, really simplify things, it's have a strategy with an edge and executing that strategy efficiently. And I don't say perfect, executing that strategy perfectly, efficiently. If you have the strategy has enough edge, then you shouldn't have to execute it perfectly. And no one executes the strategy perfectly. Even if you automate that strategy, there's problems with these bots, there's problems with your programming. So you can never count on a strategy being 100%. But you could argue if it's automated, there's maybe less room for human error and lack of discipline and some stuff like that. But I've been training for as long as I have, and I mean, maybe that's stubbornness. I haven't automated my strategies, or maybe partly because I think they're tough to automate. But I've been able to do this manually for 24 years. So you don't have to automate it, but you do have to execute those strategies efficiently, not perfectly, efficiently. That's one of my favorite memes. And this is from Twitter. I forgot what trader sent it, but again, this illustrates the point. You can read all these books, you do all this stuff, and trading psychology, and all the other stuff revolves around trading. But if you don't have a strategy with edge, and that I'd equate that to you need an edge first. A strategy with an edge would be that edge. Then the rest of it's meaningless. So if you're not, if you don't have that strategy with an edge, for me, you're gambling rather than trading. Um, and that's the scary for most people. They go, well, I don't have a strategy with edge. Well, first of all, how do you know you have a strategy with edge? Well, the numbers say you have a strategy with edge. If you have a strategy and then you execute that strategy effectively and you're making money consistently, not every single day, maybe not every single week, but monthly or yearly, then obviously it has edge. If you have a strategy and you're executing efficiently and you continue to lose money, then there's not edge there. And the scary times in my trading career, fortunately, there haven't been too many, or when I didn't have that strategy with edge. There's been a lot of times when I've lost money, but it's mainly because I had a strategy with edge, but my execution has been off. And that's for me, that's a little less scary because the execution part, I guess it's easier for me to adapt and fix than actually finding those strategies because I know how tough finding a strategy with edge is. So if you don't have a strategy with edge, I guess I could say you shouldn't be trading. I know, you need to learn how to trade and you do that. But again, your main goal as every trader should be, I need to find a strategy with edge, and then everything else comes after that. So if you don't have a strategy with edge, you are like that fool at the blackjack table, or maybe even the roulette table, and don't be that guy. Another problem is when you talk about traders who don't have their strategies don't have edge, a lot of traders don't even realize they need a strategy. People jump into the game, especially we're going through one of these cycles right now where everyone wants to be a trader. You hear about all these guys making money, whether it's in crypto or, Nvidia or the latest tech stocks. Um, and so people just jump in and they think it's as easy as just, following some guy on Twitter or buying my, favorite meme stock or, buying bags of Bitcoin. No, the whole point of being a trader is trade. That's investing. That's gambling. Well, no, it's not investing. I guess you call it investing or gambling. But a trader is you have a trading plan, and that's part of that trading plan is a strategy. And if you're going to make money, that strategy better have edge. But yeah, sadly, a lot of traders don't realize they need a strategy. If you're at that point, well, realize you have to have a strategy. Um, and again, the strategies that most of us use or are taught. And again, I'd say I use traditional strategies. Glitch strategies is a part of my trading, but traditional strategies are also a part. And traditional strategies, I guess, I'm going to just to make things easy, I'll log, strategies in two things, traditional strategies and let's say glitch strategies. Glitch strategies are taking advantage of inefficiencies and arbitrage, and traditional strategies are the type of strategies that rely on technical and fundamental analysis. They rely, I would say speculation. They're thinking and feel, I think this stock's gonna go up. I feel like this stock's going up. Riding momentum, these are the type of strategies, and this is what we're taught online, and most traders use. This is what we're reading in books. We're bombarded with technical analysis, and which is fine. Again, technical analysis is an important tool, but it's a tool that can be used in conjunction with a lot of other tools. And I feel like there's other tools that are as valuable, if not more valuable. But this is what we're traditionally taught. And I want to get away from that because I feel like most traders think they're this guy. For those who don't know, this is Warren Buffett, and maybe I'm showing my age, but not everyone might know who it is. He's a famous, probably the most famous investor. But he's an investor. He's not a trader. And I think the big problem is most traders think they're investors or they're Wall Street guys or they're hedge fund guys. We watch, and I get caught in that. I want to, the biggest, and that's usually what causes the biggest losses is when I think and I'm trying to predict which way the market goes. I watch, I think, well, interest rates are coming down. Well, this stock should go up or this go up. For me, I'm not saying that you can't make money that way, but that's not where our edge is. Some guy sitting in his basement watching CNBC and thinking, well, the Powell said rates are going to go down, so this should be a headwind for the economy, so I'm going to buy this stock. There's not, I don't know if there's too much edge in that. Yes, the markets generally go up and you can make money, but I'm telling you, and you can list the statistics, these big hedge fund managers have trouble keeping up with the benchmark returns of the S&P, and they have all the resources, they have all the capital, they have all the connections, and they're struggling. How are you going to sit in your basement and do the same thing these guys but do it better? So I think the real edge is as a trader is to kind of pick up pick up the scraps that these big guys leave behind. and this is what I wrote in my book. I said, delusions are grander about being part of the world of high finance must be swept aside. Most efficient traders are akin to scavengers, picking up the scraps that the big players leave behind. Um, so yeah, again, and I've made this mistake too many times. I get into the market and I think, I want to predict, oh, I see this guy on Twitter bragging about this huge, you know, trade he had in Tesla or this crypto coin or whatever. And yes, that is possible. And again, I strongly agree. You make money trading, then you invest it, and that over time, most markets go up. But as a trader, I don't think that's where the greatest edge for us is. We need to be more like this guy. It's supposed to be a hacker. This is the computer generated hacker I came up with. We want to find those glitches in the market. We want to look for what's wrong, hacking the system, find what's broken. Not the Wall Street guy, not the Warren Buffett, but more like this guy or these guys. These are vultures scavenging. We're I do that. I love to equate my trading more scavenging than anything else. I'm picking up scraps. If someone wants to leave behind quarters or dimes, I'll pick up 1,000 of those quarters and dimes and keep picking them up and keep picking them up. Because a lot of these big guys, they don't care about these quarters and dimes. And again, if you pick up enough quarters and dimes over time, it adds up to hundreds of thousands to millions of dollars. So the best edge for me, I think, is to adjust that mind and think more of a scavenger, think more of a hacker than this typical Wall Street type. And it basically comes down to a trader's goal is to buy low to sell high, not to predict, not to forecast, not to speculate. Buy low, sell high. Okay, so now let's get into glitches. We talked a little bit about the traditional trading methods. Now we'll talk about glitches. So what is a glitch? A glitch is a malfunction, a mispricing, an arbitrage, or inefficiency within a market. Simply put, it's something that shouldn't be there. Glitches debunk the efficient market theory, proving that any market is imperfect and can break or crack at any moment. I know there's been books and markets are efficient, there's no edge. No, again, I have the P notes to prove it. I have the P notes, so many other traders to prove it. And I have strategies to share that prove it. So that is a myth and it's been debunked. Glitch is the word I came up with. I'm not claiming I'm far from claiming to invent this style of trading. It's not talked about enough. I didn't really have a name. I know arbitrage is the name, but I use glitch to kind of group. It's a broad, and it's tough to define exactly what glitch is, but it's more of a mindset. It's more of a style of trading. It's a mechanical style of trading. It's taking advantage of these malfunctions, these inefficiencies. It's getting rid of the think, the feel, the hope. I pray that this goes up. And having that mindset of we're the hacker, we're the scavenger, we're exploiting what's broken. We're instead of looking to ride candlestick patterns, we're looking to find what's broken in the market and take advantage of it. Again, we're supposed to be this guy, not this guy. So who uses these strategies? Well, of course, there's the savvy retail traders. You don't hear them talk about it too much. Why do they not talk about it? We'll get into that more because a lot of these strategies are not scalable, and it's stupid to give away your edge. A lot of these traders are in crypto, and we'll talk more about this also. But crypto is an amazing place for crypto for glitch hunters because it's fragmented, it's inefficient, it's volatile. Prop firms. This is how I know about it. If I didn't trade in a prop firm, I wouldn't know about it. And the prop firms I traded in, this is where if not a majority, a huge chunk of our profits come from. And I know from other prop firms this way. I've talked to futures prop firm guys, and the same thing there. So this is not just equity prop firms. This is prop firms. And of course, these prop firm traders generally keep their mouth shut. They're not talking about it too much. But in the prop firm world, these type of glitches, these type of strategies I'm talking about are well known. And it's not just, well, I call these prop firms and these savvy retailers small guys, and in this food chain, they are small guys, but the upper on the upper end of the food chain, these hedge funds, the Citadels, the Jane Streets, Optivas, the Renaissance, they're doing what I would classify as glitch hunting, but even in a grander scale, they're really taking it up to a industrial scale. And most of the strategies like Citadel, they're not predicting. They're not running. I think the market's going up, or what did Powell say? No, they're just taking advantage of inefficiencies in the market, order flow, or stuff like that. That's the way to do it. It's all mechanical, and there's no one better than Citadel. If it's tough, Citadel of course keeps their mouth shut, but if you need to study glitches, that's the place to look. Why haven't I heard this before? Well, I think we'll go back to this guy. No one's talking about it. First of all, why are these guys on Twitter? Why are these guys on YouTube? Why is no one screaming about glitches? Well, first of all, I don't want to break this to you, but most of these guys, I don't know. I'm not going to claim that everyone's bullshit artists or all these P&L numbers are fake, but a lot of guys aren't, as profitable as they say they were, because I know for a fact I've been around lots of really good traders, and actually none of them or very few of them are on social media. They're talking about that. They're keeping their mouth shut. And if you make enough money, you're not, if you're making millions of dollars each day, well, why do you want to go waste all your energy and time trying to sell, chat room subscription for $50? It doesn't really make sense, or, it seems kind of strange. So, a lot of these guys aren't who you think they are, and that would mean they really don't know about edge, and they don't know about glitches. And if they did know about glitches, of course they're going to keep their mouth shut, because these strategies are scalable. And scalable, I mean, the more people know about it, the edge erodes. So on these prop trading floors, I think we literally get in. I've seen fights because people have been sharing ideas, and that's not my goal. I'm not here to, hey, I'm gonna tell all the secrets. I'm gonna give you all this, tell you. No, I don't want to do that. I'm a prop trader. My he's a prop trader for 20 years. And my goal is not to just spill the beans on all them, but I do feel like, they're in on this secret, and not many of these other guys are. So, the reason you don't know about it is either the guys you're getting your education from don't know about it, they won't tell you, or and the guys who really are making all the money, who really know about it, are keeping their mouths shut. So let's get some examples of glitch trades. This is kind of the best way to explain it. And over the years, there's been it's a countless, but lots of glitch trades. But I'll give you a handful here, and then we'll finish with one at the end. Um, we'll start with, this is one I usually, this is a simple one to explain glitch trade, and a good example of arbitrage. Um, and arbitrage, I say inefficiency, malfunctions, and arbitrage. And arbitrage is the holy grail of glitches, or a holy grail, I say, of trading strategies. Arbitrage is basically buying in one market for a low price and then selling the same instrument, a different market for a higher price. And, as traders, we kind of call this free money. And a great example was, and this still happens, and I'll share an example that happened last week, but it was more prevalent, let's say about 10 years ago, before all the bots had kind of infested the crypto markets. Uh, there were times when, and I'm making these numbers I've got here, I'm not sure what time period they're from, but they're just an example. But there was times where Bitcoin was trading for 20,000 on exchange A, and on exchange B it was trading for 25,000. What do? You buy an exchange A, you just sell on exchange B. There was some risk with this. It took a little while to flip your coin, to send it to this different address. So there was some risk there. But again, if that spread's big enough, that by far makes up for the risk. And this, of course, it still happens on Bitcoin sometimes when the volatility is there. It happens on other instruments. And arbitrage is still what I look out for, and it's as simple as this a lot of time. But a lot of traders, don't think this is kind of what trading is. In this example, there's no, and in most of my examples, there's no, I'm not sharing charts, I'm not sharing technical patterns. You buy an exchange A, you sell on exchange B. So this is a simple and great example of a glitch trade. Here is this is a little more technical, and I mentioned earlier, I'm not here to spill all the secrets of the prop world. And this talking about these auctions is, I might be stepping on some toes, and some guys might be a little uncomfortable because this is a really kind of secretive trade among the prop world and the guys in the know. But again, I didn't want to, it's tough for me to go, I'm going to teach you about glitch trading and leave this off. So I will share this. And because I feel like, especially for equity traders, you should know about the mechanics of the market. And this is a big thing about the mechanics. So let me explain. And I'll do this. I encourage all the guys, especially if you're in the equities, to do some research on your own about these auctions, opening and closing auctions. But to put it briefly, at the open and the close of the New York and NASDAQ markets, you have a big aggregated order for an auction. And this is basically, for, let's say, the big players to get out of big chunks of stocks. And so at every open and every close, you have this big order. And if you have the right data feeds, you can see the size of this order and whether it's a buy or sell imbalance. And then you can also see an imbalance quote. And, it's something that can be gamed, and there's an advantage there. And these auctions, again, and this is an example. I mean, I'm talking about the New York and I'm talking about the NASDAQ, but there's auctions. I know there's auctions on the Australian markets. I know there's type of auctions, even I'd call the intraday. I know, like equity traders, you'll see intraday a stock gets halted. And when it reopens, it's an auction. The buyers and sellers are mixed up, and then you have a print. And I know a lot of traders try and game that. So this is not the only auction. When an IPO opens, it usually opens kind of auction style. But the point is to look for, mechanisms in the market to do that. And so I'll give a good example of one of these trades. And this was a Tesla auction trade. So right at the Christmas of 2020, Tesla was going to be added to the S&P index. When a company is added to the S&P index, this means all the funds and all the ETFs that mimic the S&P have to buy this stock. And so that means all these, all these mutual funds and ETF guys are buying big chunks of Tesla. They usually do this in advance because there's usually warning. I think it's weeks or months. But for some reason, the day that this Tesla was added to the S&P, right at the close, at this auction, there was a huge buy imbalance. So there's more buyers than sellers. And I think it was 17 million shares to be bought of Tesla. And for us who have this proper data feed, we could see that the price of this auction was indicated at $695, while Tesla was trading minutes or seconds before the close at 650. So you could buy at $650 on the market and then offer your shares, sell your shares on this auction, and you would have got $695. That's $45 in literally seconds. And of course, this doesn't happen every day. This is one of the greatest examples ever. But I wanted to share this as a type of trade. There wasn't any technical analysis in it. You're just taking advantage of a mechanism in the market, this auction strategy. And this is a type of trade that most of the traders I know have taken advantage over the years. So, like I said, it doesn't do me much good to tell you about this Tesla trade in the past, but I want you to realize that there's trades out there like that. And these auctions, I will, a disclaimer, these auctions, these still happen every day, but they haven't got tougher. More people, of course, are on the party. These hedge funds are in the party. These algo funds are in it. So, don't go, oh, wow, I'm just going to do this. But I do think you should look at stuff like this. And you should, if you're an equity trader, you should know that there's auctions at the open. There's auctions at the close. There is auctions when a stock gets halted. When there's an IPO, it opens basically an auction style. Same with, whatever market you're trading. if you're trading crypto, you need to know the mechanisms and how the markets works and how there could be glitches in those market mechanisms. Here's another glitch. This is a VIX. I pointed this out for a couple of reasons. VIX is a volatility ETN, and now that this sector volatility, which follows the VIX, uh, again, I won't go too much in it. But first of all, I wanted to talk about this trade, but I also wanted to bring attention to this whole sector because for me, this is a very glitchy and I'm using glitchy in a different type of term, but it's a glitchy type of sector, and I'll call this a sector. All these volatility ETFs. If you look at volatility ETFs, there's a lot of them. There's VXX, what I have here. There's UVXY. There's SVIX, UVIX. It's a whole sector, and they basically follow. Most of them buy VIX futures because you can't buy the VIX. But if I spent some time looking at these charts. If you look at the UVXY chart, I think it was like $20 billion at one point, and I think it's down like it might be single figures. I haven't checked it recently. So it's a glitchy sector. And again, if you're looking for glitches, it's good to look at these glitchy sectors. And the UVXY perspective even says this stock will go to zero eventually. It says that. So I just want to, while we're talking about this, I think it's good to point traders in the right direction where edges, where glitches could be. So it's a good place to look. Do your homework. And this glitch trade, this was 10 years ago. And I used to trade this VXX. And then I noticed every single day when the market was volatile, when the VIX was elevated, after hours, and on here, I've actually used 3:15. I'm still on Texas time. But again, this would have been 4:15 Eastern time, 15 minutes after the close. I noticed every day, all of a sudden, VIX had a huge spike. So at 3:14 or 4:14, it was trading at $40. At 4:15, it was at $41. And it did this every single day when there's high volatility. So what did I do? You buy for 4:14, you sell at 4:15. The why doesn't really matter. Although, of course, being curious, I eventually figured out it's because it was a quirk in the rebalancing of the VIX futures. But the why doesn't matter. The key is to hit this trade while it's working and hit it aggressively and hit it until it stops working. And when it stops working, you have to try and put your foot on the brakes quickly. And it stopped working eventually after a year or so. And how did I know it stopped working? Well, instead of going up, it went down. And my P&L would see that, and my eyes would see that. So I quickly, don't give it after one day, but after a couple of times, like, okay, this trade's going away. And then, they obviously fixed this quirk. So that stopped working. But again, for a year it did. And there was no technical analysis. It was just something was broken in the structure of this ETN. Here's another fun trade this is from earlier this year. And this is something I noticed. I noticed this on Twitter, on X. Someone's Polish trader was tweeting out about it. And Bybit, which is a crypto exchange, on January 1st, they had their Forex quote wrong for the Polish zloty. Instead of what it should have been at 5.6 to 1, it was at 4.3 to 1. And, this is a great glitch. So, you're basically getting, this huge premium. I didn't have an account by Bit, and I wasn't able to do it fast enough, but I know a lot of traders who took advantage of this. This is, and this is a great example because this is not what we're programmed to think trading is. We're programmed to think trading is about following, technical patterns or candles of doji or cup and handle patterns. This is basically taking glitches, a bad quote on the Google's part, and that's what it was. They were hooked up to Google, and that's why I'm saying this. I want glitch trading requires a whole different mindset, and it's the same as something I love hearing when you go online. It's like, oh, the American Airlines website had a glitch and everyone was buying $1 airline tickets. I'm sure you heard these type of stories. For me, it's like, oh wow, that's an amazing trade. These guys got in on it, and it's not finance, nothing to do with finance, but that's market. Buy low, sell high. I know you're selling, but again, you're buying a great deal. It's buying value. And that leads me to a story. I'm going to tell this story quick. It's another great example why, and I wrote this in my book, and I've told this in that blog. It's about the time I was selling a bunch of computer monitors on the Polish Craigslist. Stupidly, I didn't really research the price too well. I don't know why. Again, that's not necessarily like me. So I put a bunch of computer monitors on the Polish Craigslist for a ridiculously cheap price. Within minutes, I got a ton of calls. Within minutes, further, a few minutes later, this guy at my door, big smile on his face, ton of cash. Give me the monitors. Here's your cash. Runs off, and I kept getting calls. I took it off, but I was like, this isn't right. Obviously, I fucked up here. So a few hours later, went on Craigslist and I saw my monitors on sale for twice the price. So I was like, oh man, obviously I felt like shit. Like I'd been taken, but I also was proud. I was like, God, this is a glitch hunter. This guy found a glitch. This was mispriced and he took advantage of it and now he's flipped it. So you can do, glitch hunter is trading. As I talked earlier, trading is not, buying the stocks and selling stocks higher or selling futures higher. It's buying and selling higher, whatever the instrument. So you can do it, do it on Craigslist. You can do it on eBay. You can do it on Forex. You can do it on stocks. But that is my point to promote this whole different mindset. How do you find these glitches? How do we? Okay, here we go. Sorry, a little technical glitch there. First of all, the right mindset. To find a glitch, you need to have the right mindset. And I keep talking about this. Instead of looking for technical patterns and instead of looking for efficient markets, you have to look what's broken. I'm not saying throw technical analysis in front of it. That's part of it. I still have, if you look at my trading layout, of course, there's charts on it, but instead of looking for beautiful technical patterns, I'm looking for weird wicks or all of a sudden a big spike or something out of the normal. That's where I find the edge. You look for flaws. Look that hacker mindset, that scavenger mindset, always nimble, looking to adjust. If that glitch goes away, all right, move on to the next one. Don't burn all your profits because the edge ended and you got stubborn. The easiest way to find a glitch is have the right friends. And I think this is with any winning strategy, whatever it is. And in the Substack post, I shared the story of the office in Texas I traded with, and my brother trades with, where the rookie trader found this amazing glitch, and out of what I don't know was being naive or just kind soul, he shared it with the rest of the office. And there was guys in there who never made a penny before were making millions within weeks. So it wasn't necessarily they're skillful. They just had, this amazing strategy with edge handed to them. They were lucky enough to be in the right environment. Of course, that's another lesson to, be around good traders, try and get in a prop firm. But that's also the easy way to find these strategies is to be handed one. Of course, it's not always some guy just benevolently handing a winning trading strategy. It's give and take. Someone's can be more likely to share a strategy with you if they think you have something to offer back. So the best way to find a strategy, whether it's a good strategy or not, is to borrow or let's say steal or get one handed to you. And this has been a problem, I go with my trading. I've always kind of like, I want to do it my own way. I like this strategy. I do, my style is this. And a lot of times because I'm connected, I'm trading these firms and, my brother handed me an amazing strategy. I'm like, that's the biggest regrets in my trading career is trying to do it my own way. There's no rewards for originality. Um, as one of my favorite traders, Robot James, would say, many want to make money and many want to make money more. Many want to make money in a legendary way more than they want to make money. It doesn't matter how you make money. Traders ultimately are judged on their P&L. And the best way to find a strategy, again, is to have, someone hand it to you. And most of these in these prop firms, that's why these guys are making money because they get they share strategies and they're one's got a strategy and they're using it and they're making it better, or they find a strategy and they tweak it to their own personality. That's the goal. And Not only, yes, you can find these strategies when you work in a group with chat rooms or in an office, preferably. But and I have my reservations about talking about this, but I found one of my greatest glitch strategies online. I talk about it in my book through YouTube from a guy with a few hundred followers sitting in his basement. Of course, I knew what I was looking for. I knew how to filter through the bullshit. I knew what a good glitch strategy was. But my point is they're out there and there's good resources on YouTube. There's good resources on that. I wouldn't say count on these resources for your strategies, whether you're a glitch trader or not, but it's a good way to generate ideas. And if every now and then you can find that needle in a haystack. Another how to find these glitches, look in the right markets. The best markets for glitches are the markets known for inefficiencies, for fragmentation, and high volatility. The less bots, the better. Undiscovered markets can yield a lot of good glitches. When we say markets are known for inefficiency, fragmentation, and high volatility, I mean that screams crypto to me. And that's why now, like if a guy comes to me, like a new trader, and say, what market should I look at? I try pushing into crypto. Um, even if you want to do traditional strategies, of course, there's tons of volatility, but these markets are fragmented. There's all kinds of inefficiencies. Yes, there is automated trade in it, but I don't think it's as prevalent as equities and futures and forex. So I think that's a great place to look. You have these basis trades, you have coin drops, you have ICOs, you have meme coin type stuff. Yeah, I mean, again, it sounds crazy, but there's plenty of glitches in these. And again, a lot of times you're not competing against, the greatest, let's say the greatest of opposition. So these are the type of markets to look for. And I say undiscovered market. I'll share this with you. I mean, again, a glitch hunter shouldn't necessarily, you know, share his secrets, but within the last few months, I've turned a poly market, this prediction market. I found that has been, especially during election time, there was, these markets, there's not a whole bunch of bots, they're inefficient. And, I found there was edge there. It's an undiscovered market, kind of like, I'm talking about crypto now, but if you were in crypto 10 years ago, oh, wow. I mean, there were so many glitches. It was so easy. When I look back, I'm like, oh man, I missed out on so much. Um, and I mean, who knows? I mean, poly market could be that, or there could be a new market. That's the good thing to do. You got to kind of get to these markets before the bots and the rest of the traders kind of suck all those edges out there. But like I said, I mean, crypto's been around for a long time, and I still think there's a lot of glitches in that market. Um, not only do you need to find the right markets, but these markets have to be accessible. First, they have to be there, they have to be secure. There's no point in trading crypto if there's a good chance you're going to get all your money stolen from, some weird broker. You need good to have leverage. Capital is king. If you can trade equities with a offshore bro, that's what I do. I get a lot of edge from equities because I get a ton of leverage with the broker I use, and I get cheap commissions, and it's very liquid, and I've got good software. No matter how good the market is, if you don't have a good way to access it, if you don't have security, if you don't have a good broker, if you don't have good software, it doesn't really matter. So that's an important thing to look at. You need the right tools, and we'll get to that also. As I said, you need the right tools. Glitches. Sometimes, the buying a bunch of computer monitors on off some idiot on uh, Craigslist, you don't need heavy duty software or bunch of filters. But although I know, like on eBay and places like there's guys who are using these kinds of software. But a skilled glitch hunter is equipped with the right hardware, the right software, the right data feeds. And I'll talk again about this strategy. I said, the strategy was handed to these guys in the Texas office, and this was an auction type strategy. And this was only accessible because they had the right data feeds that not many other traders had, and they're lucky to find it. Um, and most of, when I'm looking for glitches or when I'm trading generally, of course, I have order books, I have auction data, I have market filters, I have good software, I have all that kind of stuff. So whatever market you're looking in, you need the right tools, the right software to go inside and find, what's broken, what's fixed. And a lot of these trades revolve around auction type stuff where you need special tools or, with crypto, you need accounts on different exchanges. You need there's so many different new filters too. I can't keep up with it, but these tools definitely help find these glitches. The right time. Of course, you need the right, time as in, it takes time to find the glitches, which could be weeks, months, years. These glitches, my goal is to say they're easy to find and these glitches, they're extremely tough to find and they come and go. So it can take time. If you're dedicated, I've got 10 minutes to dedicate a day or a week to find glitches, you're probably not going to find one. I sit in front of my screens for hours a day, and I've done that for 20 plus years. So, it's a lot higher chance, and I know what I'm looking for. But if you don't have the time to look for them, you're probably not going to find them unless you're handed one. And when I say the right time, I'm including to like necessarily the time of day, the time of year, or the right time in the markets. Um, I'll share a secret about my trading. I'm an equity trader, and I basically only trade pre-market. And I find the pre-market, especially when the volatility is not low, when the volatility is low, I trade pre-market. And I like the pre-market because it's slower. There's less algos. There's, let's say, less going on. There's only 100 stocks with real volume compared to, 20,000 when the market opens. And I find it more glitchy because there's less market participants. There's less algos. So I find it a lot more conducive to finding these glitches. And I know a lot of traders just trade the open, glitch hunters trade the open because there's a whole burst of energy and you have auctions or same with the closes. Or I know a lot of futures traders, they really focus on when the futures market opens on Sunday night because you also have a burst of, volume and let's say opportunities for glitches. So you can dedicate, if you know what time to look, you can, dedicate a few minutes to it rather than sit there all day at the wrong time of the day. And I'll talk about these prop firms again. There used to be guys. I used to sit in this office, and then once, kind of, it'd be once a quarter or once a year, once a month, when there was a big trading event. It could be an auction, it could be a big IPO, it could be some other type of glitch. All of a sudden, these guys would come off the street and you say, I haven't seen you in forever. What are you doing here? But they knew this was the right time. So they can make more money in, a few minutes or seconds at this particular time than they could sit in this office for months staring at the market, some other time when they know there's probably not going to be too much edge. So when you're watching the market, also, man, and the best time to watch the market is when it's really volatile, because when the market's really volatile, that's when it really tests the market structure. I know, like during 2008 and through 2020, this is when these glitches really came alive because the market was really shaken. A lot of these algos pulled their plugs, so you didn't have to play with them. There wasn't as much liquidity, and so the market structure was really struggling. And a lot of stuff didn't really work how it was supposed to. This stock didn't follow this, or this stock was way below its NAV, or this auction was working really good, or the price of gold wasn't following the gold miners. There was so much glitchy type of stuff because the market was dislocated. So that is really the time to look for glitches is volatility. Volatility is the trader's best friend. Really, if you're a glitch trader or not a glitch trader, I think any successful or really skilled trader, their P&L curve, it never goes like this. And it's usually volatility, that causes these big spikes. Right event. And like I just mentioned, you have these traders coming off the street because they knew when to trade. And it's usually an event. It could have been an ICO, an IPO, this Tesla imbalance. This is something people knew about. It was, you could read, I knew Tesla's going to get added to this thing now. When the market's really volatile, I can look at the VIX and go, this is crazy. In August, when all of a sudden you had this deal with Tokyo, the Japanese market, and the volatility spiked up. Any trader should have been like, licking their chops, but especially glitch traders, because that's when the market comes dislocated. Okay, so the conclusion is, I'm not, this is not this is the only way to make money. This is the way you should trade. My goal again is to point out the way a method and style that the majority of the successful traders I know have made the big portion of the profits, and the type of strategies that I and we found offer the greatest edge. Um, this is, and this type of strategy, as I've said, is not just for equities. It's not just for crypto. It's for anything that you can trade. It's about buying low and selling higher and taking advantage of discrepancies, glitches, something that's broken in the market. And I know a lot of traders that go, well, this sounds great, and maybe I do believe you, but that's not, I want to be a trader. I want to be like this guy on Twitter. I want to, follow this candlestick pattern. I do feel like, I want to feel like I'm a part of finance, that I'm doing something productive, not some little scavenger or hacker, picking up scraps. But trading is so, so tough. 95% of traders fail. You don't really have the luxury of deciding, oh, well, I like to trade like this, or I like to trade like that. You really have to go to where the edge is, regardless of how you want to do it. If how bad you want to trade. Like ultimately, traders are judged on your P&L. Your goal should be to make as much money as possible. And I'm telling you, this is what at least I think, and what the traders I've been around think offers the greatest edge. Um, I I want to wrap up with a couple of glitch trades that I found this last week. Um, so I'm saying they come across very rarely, and they're not shared. Well, these are two from last week, and I will share. I'll agree that one of them wasn't really accessible, but it's a great example of a glitch trade. And this is, some of you may have heard about this. At least you might have heard about the turmoil in Korea. And Korea, I think it was, I'm not sure what day it was. They had a lot of political trouble, and martial law was declared, which of course causes volatility in their stock market, but also the cryptocurrency markets. And amid the panic over there, the price of Bitcoin on their main exchange dropped to 65,000. And this was a sudden drop. And at the same time as the 65,000 on the Korean platform, Upbit is the one that I was told. I'm not sure if it's this big one, and I'm not sure if it was the only one, but I assume so. Or I assume it wasn't the only one. And on Binance, it was at 95K. Oh, 65 to 95. I mean, that's quite a spread. If you were a Korea, if you had an account on Upbit, there was quite an opportunity. Of course, you had to have an account on Upbit. You had to have access to the Korean crypto market, and you had to be there, and you had, to execute this trade. It would, of course, most US traders, I think Western traders, you can say, well, how am I supposed to trade this? I don't have an Upbit account. I know this, but my point is just to trade and, point out a good example of a glitch trade that happened this week that was huge. And, who knows, maybe the same trade could happen in the Western markets or happen on a different market. But my point is, it's out there. And I know I haven't done many technical patterns, so I will share a chart. I will share a chart. Here's a chart of Korean Bitcoin. As you can see, it went from 95 to below 65. And this was within, looks about 10 minutes. That's edge. That's edge. And so if any Korean traders were fortunate to catch that trade, congratulations. I'll share this trade. I've been here. A couple of traders I know on X have shared this trade, and Zero to Tom is one of the guys I really respect and follow. And this is what they call a basis trade. So on crypto, you have these perpetual futures, which you can kind of hedge out. So the basis of this trade, you buy this hype coin. I think it's a hyper liquid exchange is the coin, and you buy the spot coin. So you actually own the coin, and on this hyper liquid exchange, you can sell the perpetual future. So you're hedged. The perpetual future and the spot, generally they should go in sync. But by shorting this perpetual future, you get a 380% APR. 380% APR. Yeah, that's right. I mean, we're talking in the world of finance, traditional finance, 10% is a good APR. So you're talking 380. Of course, you got to hedge it, so you can kind of cut that in half. So it's 190% APR. I mean, that's, unheard of return in a hedge trade. Of course, there's other risks. You have to hold this hype trade. But again, I thought this was a great example of a glitch trade. And these are the type of trades I'm looking at. And that's what, a lot of times when traders come to me now, this is what I like, do this trade. But again, traders they want to be shown a nice candlestick, not buy spot hype and then hedge it on a hyper liquid, funding rate. That's not the type of trade he's looking at. But that's what trading is. That's what trading is. It doesn't have to be speculating. It doesn't have to be predicting what way a stock's going. It's more about, picking up that scraps and taking advantage of glitches in the marketplace. Um, okay. So I think that's about all I have. Now I'd like to do some Q&A. Let me see if I can get this working right. Okay. Is there anyone with any questions? I don't see too many. Is there anyone with any questions out there? If you don't have any questions for the Q&A, again, I'm happy to, you can send them to me. Um, you can email, you can DM me. I'm happy to, talk in X, however you want to do it. But the point is to keep this conversation open. And, if I find more glitch trades, um, we'll share that. I heard there was a glitch. I've gone through the Q&A. It sounds like when I was practicing, when I was doing my rehearsal, the glitch was my rehearsal was broadcast. So sorry to those who had to see me struggle in my rehearsal. Um, I'll check back, but when I also want to, I'll do a few links before we close. Um, and here we go. If you, of course, for more information on these glitches, there's my Substack, which I've wrote about the glitches. I have a couple articles on there. I have some more. I think there's 4 or 5 uh, posts on that. So I'll keep that going. And you can follow me on Twitter, Cream Trader. That's on X. My website, actually, I do have some stuff on that. That can be an educational resource. That's david-hale.com. There's my book, which again, basically the book is my story of trading, but it relies heavily on glitches. And I talk a lot about glitches, a lot of stuff we're talking about. So that's another thing. I talked about accessing these trades. Again, if any of you are interested in a US broker, I can talk to you about that. So DM me with that. Let me see if we have any questions. Here we got a few questions. My X handle, that is Cream Trader. And I do post fairly regularly on that. And again, if I find glitch trades, I try to share them on that. A question is, how would we buy the software required to find the glitches? Uh, it depends on what you're trading. If I'll go buy equities, you need a professional. I would recommend for any serious equity trader to have a professional software. Again, a lot of traders use, I can recommend a couple. DAS is one. I've used Sterling in the past, which is pretty reputable. Tachyon is another. There's quite a few platforms out there, but I would recommend one where you have an order book. And some people call that level 2. And then you need once you have that, you also need to make sure you have special feeds. There's a lot of different feeds you can have the different exchanges, and I think there's a NASDAQ total view. There's an NYSE ARCA book that you can get. So make sure not only do you have the proper software, and then you have the proper data feeds. And then you need, there's tons of different filtering software too, that you can get to help you find that stuff. Um, why have I generally shied away from automating these glitch strategies? A lot of time, again, I guess there's probably a number of reasons. They come and go pretty fast. I'm not a as you can tell, I don't even know how to do it. It's my first um, PowerPoint, so I'm not a skilled programmer. So, but of course, that doesn't mean there's not software and there's not easy to access programmers. The big reason is they come and go pretty quickly, so you have to be really fast. And that's kind of my thing. I'm a discretionary keyboard mouse type trader. And I feel like even though a lot of these trades can be automated, I still feel like because I have the experience that my feel, I'm sorry I'm using this word, my feel can be a benefit. But I do recommend, especially the way the market is now, and when new traders start, I always make it, art, do you know programming? I think that's a huge thing. What's your math background? When I first started, it was, a bunch of guys sitting in an office and they're pointing and clicking, and it was a different world back then. Now, with automated trading, I think it's important to have some kind of programming skills and, generally automate your strategies. So yeah, I mean, like I said, I hope that answered it. Maybe a little stubbornness is also the reason why I've shied away from automating these strategies. Um, is it really viable for a small stack, as example, basis trade and not really bringing back great multiples? What would your advice for a 100 stack and a 1 million stack? Well, again, I think every trader needs to start with small leverage. Jump into these, as a glitch trader, whatever you're trading with huge size. Start small. And yes, the problem is that a lot of these glitch strategies are not scalable. That's why we keep our mouth shut. That's why we're not sharing them. Um, but I think trades like this basis trade I just mentioned, it seems pretty scalable. I don't know how liquid, this a lot of these Bitcoin arbitrage strategies are, but I think they're fairly liquid enough. Um, this trade I'm talking about where this whole office took advantage of a auction strategy. It was liquid enough for a huge office to be able to take advantage of it. So yeah, I think again, I wouldn't worry too much about your stack right now because most of these aren't huge scalable ones, but there are trades that are scalable. Would you say it's mostly screen time to be able to spot these inefficiencies or an underlying understanding help? Does backtest and research does backtest and research help? Um, you know what, I don't, with the backtest and research, the backtest and research is, I think it's good to know what to look for, because a glitch is, once the edge is gone, they're gone. But again, I guess it's good to know what markets these glitches are happening in. Screen time, of course, I think screen time is good for tons of reasons. Any new trader, whatever strategies you're doing, if you're doing glitch strategies, if you're doing traditional strategies, especially when you first trade, the key is to get screen time. Once you start being profitable, again, that's, you have the luxury of spending less time away from the screens. But if the market's good, of course, you want to be in front of the screens. But I would, the first thing I would recommend is a lot of screen time. And that screen time can be watching order boxes. It could be looking for wicks. But it also could be, scouring the, getting education, following some traders that you really respect that are handing out, good trades and not, and looking at what trades they're talking about or what strategies they're talking about, and then going, doing research on that. So screen time is not necessarily just staring at the markets. Yes, that needs to be done. I feel like tape reading can be a big benefit to traditional strategies and this type of stuff. And the way to learn a tape read is, screen time. Um, but there's also other ways to spend that screen time. Where do I start with implementing this? Do you have a fixed process you are following each day? Do you journal trades and record performance? Yeah, of course. First of all, journaling trades and recording performance is what I recommend, not if you're a glitch trader or a traditional trader, whatever you're doing. And of course, I still do that. A big thing for me is like knowing you know, when these trades are going to hit. So, a lot of my journaling is like, what time of day or this am I specifically making money? When are these, is there more edge in the market for traditional and glitch type strategies? Um, and when a glitch does, this was record performance. I want to also mention that if I find a good trade or a good glitch, I record this glitch just to just kind of, so I have some evidence and kind of research it and see what exactly is happening, but also to kind of record my performance and my execution. I think that's an important thing to do. And I do, with my fixed process, regardless if I'm glitch hunting or traditionally trading, I do both, is yes, I have a fixed, every trader should have a fixed process. I have a routine. I start at this time of day, I eat this time of day, I exercise this time of day, and then I watch the market this time of day, and I'm looking for trades. I know I start trading at 10 a.m. once the pre-market opens. So, and this is European time, that would be 4 a.m. New York time. So that's when my routine starts. And I know, I mean, again, I'll let you guys on. This is it's called, this is a glitch. At 4 a.m. New York time is when the servers go on for the pre-market trade in let's say a handful of trading platforms. There are a few now where you can trade 24/7, very, very, very light trading. But there's a lot of, kind of day trading. I know the broker I uses and a few others where you can start trading at 4 a.m. Eastern, New York Eastern time. So as soon as those servers go on, you just have glitches everywhere. There's the market, a lot of these stocks don't know where to open. So you just have orders kind of all over the place. So it's really glitchy at that time of day. So I know at 4 a.m. I turn on, I get out, I'm fortunate. I know the guys in New York or in the States, in California, that's what midnight, in Texas is 3 a.m. So it's a lot more difficult to trade those hours. But I know that that's my routine. I know that there's edge there. That's my routine. I know that's when I should be trading. And I record that performance and I record my screen and I watch my trades and I know what to look for at those times. How do you measure a strategy has enough edge based on percent of successful trades out of a handful of data trades, or is it Sharpe ratio? Um, Sadly, again, I'm as old school, and I'm not saying that I have the right approach. This is more out of just habit. When we talk about Sharpe ratios and stuff like that, I'm more, what tells me if I have edge? My P&L tells me if I have edge. Um, if I, and I've been trading long enough that I can basically look at a strategy and for a few days and say, okay, there's edge here or there's potential for edge. Uh, if you're not experienced, yes, I agree. The more data you have, the more research you have, the more, Sharpe ratio and stuff like that is helpful. But ultimately, your P&L will tell you if there is edge in the strategy. Like I said earlier, if you have a strategy and you're executing efficiently, and you're not making money with the strategy consistently, not every single day, not every week, but say every month or every year, then obviously there's not edge in the strategy. That's a simple way, old school guy telling you how to find out if there's strategy in your edge. Curious if you ever continue trading a glitch strategy, even if you're getting punished. If the market regime is still right, to what extent does the market climate play into glitch exploitation? Um, yeah, the thing is you have to, like with any strategy, you have to kind of lose some money before you realize the strategy is not working. So if I have a good strategy, whether it's a traditional strategy or a glitch strategy, and it stops working, I can't, it's no trader's gonna go, well, it's so good. I don't want to ever lose any money on this strategy. So I'm just gonna quit while I'm on top. No, you milk it as much as you do. And then when it stops working, again, how do you know when it stops working? You start losing money. Not because you execute the strategy worked and you execute it wrong. No, because your execution was efficient and the strategy is not working. I don't discuss, usually I give it, um, it's tough to say, if a strategy is working for, 2 years, I'll give it, I'm not going to say after 1 day or 2 days or 3 days, it's that, like, oh, I don't feel like it's going to work. No, you keep going. You might lower your size, be less aggressive, and, okay, this is, there might be something up, but you have to keep your eye on it and keep watching it, realizing it could be going away and realizing slowly take the foot off the pedal and don't give back all those profits you made because they do go away and you do have to adapt. And again, it could be that the glitch strategy or even a traditional strategy isn't not necessarily going away. You just kind of have to tweak it. The glitches change a little bit. So, and the second part of the question, does it the market regime, the market climate play into glitch exploitation? Yes, I talked about that. Of course, volatility is a glitch well, should be any trader's dream, and especially for glitches. The guys, me and the guys who fed on these glitches, 2008, 2020, 2021, when we had the market volatility, were the greatest trading years we've ever seen. Not because, strictly because there was volatility. And when we have volatility, it shakes up the market gets disjointed. If the volatility is high enough, a lot of the algos plugs get pulled and the markets are inefficient. And that's a glitch trading stream. How much and what setup do I need to go full time? That's not, and again, this doesn't just equate to glitch trading. We can use this for any type of trading. Uh, to go full time, yeah, how much, what setup? First of all, what setup? A professional setup. I would suggest, you need the right software, level twos, good charting software. Like these DAS I mentioned, Sterling. These are the type of software I would suggest for equity traders. But if I'm talking to if you're a new trader, it sounds like it could be a new trader. I would say not necessarily look at equities, maybe go to crypto. And for what setup you need, again, I'm not necessarily the guy to look at, and that's in that avenue. But again, for that trade I just mentioned, this basic trade, you don't necessarily need a setup. You need, there are filters, and I'll be sure to send that. I can share that link that lists all these the APRs on all these funding rates. So that's all you need. You need the funding rates, and you need be able to execute these trades. So you need to be able to trade on these certain platforms, which is in this case I think was hyper liquid. Um, but again, if you're trading, how much money do you need? Again, if you to make money, you need money, but I also wouldn't, you don't want to, if you don't know what you're doing, don't start out and throw all the money away. Start small, keep your losses small, and then build that account. But as a general rule of thumb, I tell traders, you know, don't think you're going to be a professional trader if you really don't have less than $10,000 to lose, because you will lose to start. So, if I have to throw a number out there, I think 10,000 is a general number I feel comfortable talking about. How many glitches do you find on average per year? Do you find them with stats and analysis or mostly by networking? As I said earlier, my stats analysis is not amazing, although I have become more technical. And, I don't know if you could say stats analysis, me, watching the market and, studying different markets and looking, for arbitrage and that's what, for a lot of these things, I'm looking at crypto markets, I'm looking at funding rates, I'm looking for um ICO drops. I'm looking, although that's not as good, you're looking for coin drops, you're looking for games like that. Which is not necessarily stats, it's just looking, where is the edge or where are these savvy traders pointing me. So yeah, a lot has to do with networking. Um, and it is good to know professional traders. It's good to work in an office, but I shared a couple trades that I got from, Twitter or X. So they were out there, but also don't just go, oh, I'm just going to follow this guy every trade he's doing. No, use it. Go look at his eye. This is giving me an idea. Now I'm going to research. Now I'm going to look into these exchanges. Now I'm going to do more research on basis trades. I'm telling you, if you're a new trader or if you're any trader looking to get into trading, basis trades right now are a great place to look. And again, if you go through X or Twitter or Google, you can find a lot of information on that part, more than I'm going to be able to tell you right now. But I will at least tell you there's edge there. Now go there, build your own strategy and execute it, and that's a great thing about trading. And that's what I like to do is build my own strategies. I find it creative and I find it rewarding. So, it's if someone points you, all someone has to do is point you in the right direction, go, there's an edge here, then it's up to you to build that strategy. And how many do I find on average? Again, it all depends on a year. Sometimes I don't know, I might even say zero I found in a year. And some, especially in these volatile periods, every day I'm finding glitches. The market's malfunctioning. There's, this is off, that's off. This auction's working, it's crazy. If I go back to, 2008, 2020, it was just nonstop. But, when the market's really slow, it's just a slow grind, and the market's really efficient. It's just a bunch of bots going at it. But that's just equities. That means you maybe have to look for another market. Crypto might be going crazy, or you look at poly market, or you look at somewhere else. You're always kind of with a head on a swivel. Do you use a news feed? I think this would be a news feed, which in case, what do you use? Throughout my career, I a lot of times use a news feed. And again, I don't know if I mean, a glitch when I first started trading, I guess you could call this was a glitch. We had a news feed and the news guy would call out XYZ stock is done this. And this was before all these bots were hooked up to these news readers. So if it was kind of, if you were fast enough, you could beat the bigger players to buy in these stocks. So Pfizer had great results on this drug. We, bang, 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 buy some Pfizer. And before everyone else got into it, we'd quickly scalp out. That trade's gone and it's been gone for a while. We can't beat the bots. Speed doesn't matter. But I still know there's a lot of guys who concentrate on news plays, not trying to necessarily beat the algorithms to the news plays, but again, they might fade these algorithms or build a strategy around this. But right now I find that distracting. It takes away from my trading, just like I find that having CNBC in the background causes more trouble than it does. Or me listening to what Jerome Powell's got to say, it clouds my mind and I start thinking I'm a hedge fund manager and I'm trying to, get away from glitch trading and trying to predict which way the market's going, which is not my game and I don't think is most traders' strength. So I try and stay away from that. Have you met any consistent profitable trader that trades on candlesticks only? Yeah, it sounds like there's tons on Twitter or X. Everyone's making a ton of money. And again, right now, I'm sure there are. Market's going straight up. If you're buying anything, it's possible. So, but yes, I'm not, I'm not going to totally bash technical analysis. Like I said, my own trading layout is filled with charts, and I use charts. Charts are valuable too for glitch hunters. That's how I found this VXX trade. I found it because I found a huge wick in the chart. If I can't see the chart, then I'm not going to find this trade. So candlesticks are a valuable tool, but even with traditional strategies, I feel like candlesticks should be used in conjunction with other tools. What are other tools? Tape reading. And again, and I promise I think the next, I'll give another one of these webinars, and this will be on traditional strategies and I'll call more niche. My traditional strategies are like, I trade this certain sector or this certain stock and I'm tape reading, I'm going off the chart, or it lags this certain sector. Not just I'm looking for a technical pattern, but I do believe there are traders, yes, out there making money with candlesticks. But do I believe there's more edge and glitches? Yes, 100% I believe that. But are glitches tougher to find than cup and handle candlestick pattern? Of course they are. And are there thousands or hundreds or millions of more traders using candlestick chat patterns than glitch trades? Of course there are. So there's going to be profitable traders out there, especially when the market's going up. But when the market goes down or we have volatility, I think that's when a lot of these candlestick or technical traders suffer, and that's when all the glitch hunters are making tons of money. A couple more questions. I'll try to end this in 5 minutes. Um, Relying on glitches to make money does make I mean, these relying on glitches to make money, does make that the sustainability of a trader a bit weak. I mean, I have difficulty in believing there is a system to finding glitches systematically. To me, is very much a matter of structural changes in the overall market. I agree. Like you said, I'm not here to sell you on this. I'm nothing, I'm not a salesman. I'm not selling you anything. The goal is I'm telling you a method of trading where I've made the majority of my money. All the prop traders been around and made the majority of their money. I know these huge hedge funds are making a lots of money off of it. I see this crypto traders making a ton of money. And again, I'm not telling the traders to strictly rely on glitches. I think the whole point is to use them in conjunction with traditional strategies. And I think I try to get that point across. And I want to have a webinar where I'll talk about these traditional strategies. So, yeah, and I'm sorry because I am, as I mentioned, I'm old school. I don't have a bunch of stats. I don't have a bunch of charts. The goal of this is to point you in the right direction and let you do the legwork. And that's the way it should be. If you're counting on someone that hands you this golden strategy, you're out of luck. Even though I would say me showing the basis trade, I am handing you, or zero to Tom is handing you a golden strategy. My goal is to show you a mindset that you might not have heard about, and then push you to do a little homework and go in that direction and see if you can find a glitch, or if you're handed a glitch, just to look at it different. And don't count, and I'm 100% saying that, yeah, don't count on glitches solely, if you're going to be a full-time trader, a professional trader, but there is money in these glitches and they still exist. I've given examples from 2 examples from this last week, and there's more on Twitter. I'm sure there's plenty of traders in these prop firms making money on these glitches that we're not even, know about or talking. So yeah, that's again, I want to make that point that this is not, this is the whole point of this is to point you guys in the right direction, try and show you a new mindset, guys and girls, and you know, open your mind to something you might not know. Any prop firm recommendations, modern day ones or old school ones you're familiar with? How does one get into old school ones? Um, Yeah, man, I was trading at Kirshner Trading, which is I'd highly recommend. I think they have a relationship with S&B now, which sounds like a legit one. My brother's 20 years at Great Point Capital. So there are a few out there. Um, again, and then they're on the food chain, you've got the Citadels, you've got the Uptealers, the Jane Street, we call those prop firms. Um, I'd recommend any of these ones I'm talking about, any ones that don't, that have a trading floor, that have education, that offer leverage, that aren't out telling you to put up, $100,000, and that have successful traders around. If you can get a job at one of those, do it. But not anyone who's offering funding challenges, or the alarm bell should ring with any kind of talk like that. One more question before I let you go. John had success with glitch trade as a glitch trader. He enjoyed the book. Oh, sorry, there's no question. Um, Let me find this. All right. Again, this is maybe my first time. All right. Last question. Do you also scalp in the traditional sense using order flow as given these glitches are rare? If so, what is your process? How many trades are you making a day? Yeah, that's a good one to end on. And I want to get more into this. I'll do another webinar where I talk about my regular trading. And yes, I'm a scalper. And I think that scalping mindset is good for glitch hunters. I think, because these glitches are typically really short and, you kind of need that mindset. So I think that, that meshes well with my scalping. Um, and yeah, I'm looking at order flow. Order flow would be for me an order book. I'm trying to read the tape. Uh, I'll let you into a secret. I tape reading sounds old school now. Everyone's talking about technical analysis. I still think there's edge in tape reading. I only trade pre-market, and it's because I find that reading the tape once the market opens is really tough. Pre-market's a little easier. So there's a little hint for all you tape readers out there. But I want to get into that in the next webinar. So we'll do that next time. Um, so all right, I'll end it there. It's getting late here in Poland, but I do appreciate all you guys showing up and girls showing up. I know it's maybe not the webinars you're used to with tons of candlestick charts and bunch of statistics and sharp ratios and all that kind of stuff. It's me just kind of yapping, and but I hope I was able to share something that might ring a bell or set you in the right direction and just open your mind to a new thing. And I'm not selling anything. I want you to realize that there is edge in this style, and also, I wish all of you good luck in your trading. And if there's anything I can do to help, reach out to me. I'll in the next week, I'll try and send out a summary of the email list I have, and also some links, maybe of some trades, any other resources I think that can help. And reach out to me, and I'll go through these questions I didn't answer and try and answer those also. So thank you everyone for attending. It was hopefully it went okay, and hopefully well enough that I can do another one of these, because I do enjoy educating, and I hope I can make a difference in that. So good night to everyone, and good luck with your trading. All right, bye y'all.